When the traditional IPOs from the class of 2021 and 2022, along with the 151 stocks in the CNBC Post-SPAC Index, only 380 of them are still large enough for me to talk to about on television. From those 380 new listings, excluding the 42 where we couldn't find enough data, there were 125 names that had positive free cash flow in 2021. Discouraging, but not surprising. A lot of junk came public last year. Next, we considered valuation. So we cut anything that's trading at more than 40 times its free cash flow. Then we also threw away some Chinese and Russian and Cypriot stocks. They're geographically tough to own right now. That left us with 60 names. There were some surprises. For instance, I didn't expect to see Wheels Up in there. That private jet rental club at a post-SPAC stock, been a horrific performer. Yet they had positive free cash flow last year. Even with the stock at $3 and change, though, I'm not tempted. I'm not tempted because they're set to keep losing money until 2025. Not good enough for me. We also found some overlap with our January screen based on positive earnings. Playtika, Open Lending, Traeger, Solo Brands, all of these continue to have my endorsement, but tonight we want some fresh ideas. After poring over the 60 newly public stocks that passed the test, there are 5 that I think are okay. First is Hayward Holdings. This is a maker of pool equipment and related automation systems. I've been watching since it came public a little over a year ago. I love the pool business. It's one reason I've been recommending Pool Corp for ages. Hayward Holdings occupies a similar position, but is a very consolidating industry. Now, when Hayward reported its most recent results, they took a bit of an earnings hit because of rising costs and supply chain disruptions. But the stock barely skipped a beat. While their guidance was allegedly disappointing, they're still forecasting 9 to 12% EBITDA growth this year, which many of these companies would kill for. Plus, the stock trades at less than 14 times this year's earnings. Making it much cheaper than Pool Corp. That one works for me.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.